Hej och välkomna till Investerarbrevets Investerarafton special. Idag har vi nöjet att presentera två bolag som ligger i den absoluta framkanten av tech-utvecklingen och integrering och implementering utav densamma. Vi presenterar bolag inom blockchain-verifiering om jag ska vara lite noga, och digitalisering utav råvarumarknaden. Eftersom båda bolagen är engelskspråkiga så kommer vi nu att fortsätta på engelska. So hello and warm welcome, and if you tune in to Investerarafton special from Canada, a very good morning to you. If you watch this live, you can interact with the management and by asking questions, and you will do that via the top chat or the live chat, as it were. We will handle your questions at the end of each company presentation. This broadcast is brought to you by Investerarafton.se, Direkt Studios, Scandinavian Alliance and the participating companies. Scandinavian Alliance is a full-service company expert, and as such can connect any company with the Scandinavian and Northern European markets. And for more information about Scandinavian, please go to scandinavianalliance.com. So, with the disclaimer under our belts, it is high time to kick off today's presentation. First out is an enterprise that connects public market investors not only to the crypto but also to Web3, the metaverse and NFTs. And here to tell us how this is doable and how to monetize it all is the CEO of Tokens.com, Andrew Kegel. So hello Andrew, how are things in Toronto?
Things are good. Thank you for having me on.
It's a pleasure, and I'm really looking forward to this. So without further ado, the stage, the scene, and the screen is all yours. Please go ahead.
Great, thank you very much. I'll walk through the presentation, but before doing that, I'll give a little bit of my background. I was an investment banker for 20 years in Canada, and I like to get exposure to things I wanted to invest in, similar to most people, which is through the stock market. And in 2016, I got really fascinated with Bitcoin as sort of this emerging new cryptocurrency. And by 2017, I was really fascinated with it and wanted to find a way for public market investors to get exposure to it. I ended up co-founding a company called Hut 8. Hut 8 ended up becoming one of the largest crypto miners in the world. I left banking, I became the CEO, and I built the business. Today, the company has reached a capitalization of close to $3 billion, trades on the NASDAQ as well as several other exchanges. It gave people the ability to invest into the Bitcoin ecosphere without having to actually go and buy Bitcoin, which can be very complicated for some people. Following on that idea, I said, there's a whole bunch of other really interesting things happening in the Web3 crypto space that are not related to Bitcoin. And so I created Tokens.com. And Tokens.com was really a way for me to say, here is another public company that holds assets and builds businesses related to crypto and Web3 that might be difficult for the average investor to do on their own. So maybe with that, I'll start going through the presentation. Again, we're a publicly traded company. We try and offer a simple way for investors to get exposure to, as what I hope to communicate, is one of the largest and fastest growing pieces of technology on the planet. To give a little background, when people think about the internet, we're currently thinking about Web 2, and the history of the internet is originally it was read-only flat data. There was no interaction between users. Today, most of the traffic on the internet is controlled by a few companies, and we know who those companies are. And the product that they sell to people is us. So, if you think about Facebook or Instagram or some of these other things, they're taking our information, they're taking our pictures, our data, and reselling it. What Web3 is all about, which is this new emerging technology, is the ability to use blockchain technology for consumers to re-own their personal property. It's a way to sort of control and, in a sense, be able to do what Google or Facebook and Meta do, but to do it on your own. Let's talk about the addressable market here. Web3 is this massive area that's coming, and I often like to talk about the demographics. I think a lot of the world today has been shaped by baby boomers. That's politics, music, art, the banking system. And why did they control it? They've been the biggest consumer in the world, the largest piece of the largest cohort of the population in history. But what a lot of people don't know is there's this new Gen Z and this alpha generation. I call them the Zalphas. This is from 1996 to 2025. And within the next couple of years, They are set to be the largest consumer in the history of mankind. Okay, so this is a very young generation that thinks different, they act different, and they're not accepting the rules and the platforms that have been put in place by the baby boomers. I give you an example. There's a game called Roblox, which is a metaverse. It has 70 million kids using it daily. I have 3 children in this generation. I mean, it's very powerful the way they're working. You look about, collectibles and NFTs and things you've heard about. This is a really fast growing piece of technology because of this generation. So what I would leave you with there is to say the disruption is occurring at a level that hasn't really been seen since the outset of the smartphone, and we can see how that's revolutionized many things. There are billions of dollars being invested today so that tomorrow's technology giants, the Googles of the future, are being funded and built today. The tokenization of all assets is going to become inevitable, and the tokens will record information about underlying physical and digital assets, the attributes, transaction history, and ownership. And our view is that the metaverse will be the dashboard or the place for AI, virtual reality, augmented reality, blockchain, and Web3 will all take place, because that is where this alpha generation is transacting. And so our perspective is by 2030, Web3 will be measured in billions of users and trillions of dollars. And that's just not us saying it. This is Citibank, Goldman Sachs, JP Morgan. Everybody's projecting that this is going to be a massive, massive area. So what is tokens.com? Tokens.com, if you stand back, is really a holding company, and we own various assets that are linked to the growth happening in these areas I've just described. What we're really trying to do is say, what are the areas that we can leverage to say, okay, demographics, the population are changing, they function differently, they're doing things in the metaverse, they're shopping differently, they stream, they don't go to shopping malls anymore. How do we leverage that? And these are the assets that we have. And I'll walk through them quickly, and I'll show some videos here in the background for people. So Metaverse Group, I'm going to just turn the sound off, is one of our companies that brings brands to life in 3D worlds. So again, this is projected to be a multi-trillion-dollar business in the next few years. And I said every single brand in the world will have some type of immersive digital experience by 2025. Most have already. Pretty much every bank, every fashion brand, automobile companies do that. The services we provide, and this is all our work, by the way, we provide 3D design and activation in all metaverse platforms and the new Apple Vision Pro. We can design and sell branded NFT products. So we did something for DKNY, a big American fashion brand, where we created NFTs that were given away, and they provided the recipients with the ability to access certain areas of the website and receive discounts on the clothing. We do e-commerce integration, and so it has to be more valuable to a company than just having a virtual store. There has to be a way to monetize, and so we're developing some really unique ways to do that, and also visitor traffic generation. You can build something, but if people don't attend, if there's no visitor traffic, that's not very valuable. And so you can see here some of the things that we've done so you get an idea. This is some of the clients that we've worked with. Some of them I've mentioned before, and I'll walk you through some. And we've continued to grow our client base. We've recently won a contract for one of the largest banks in the world. But this was DKNY. What was interesting about this is the average dwell time here was about 18 minutes, which means that people who visited this virtual store spent 18 minutes there. And this got over 350 million media impressions. So it was a great way for them to build brand with this Zalpha younger generation who, again, they don't watch TV, they don't shop at the mall. So this was a way for them to communicate who they are and what they're doing. Forever 21 is a very large fashion brand in America. We built for them a fashion retail store with a DJ, a party. This ended up getting close to 75 million impressions. And the average dwell time here for people who visited was 27 minutes. And this is because they could go shopping. So we designed all these NFTs. They could shop, they could listen to the music, they can interact with other people. So that's, again, a unique part of this. You can go and meet people there and do these things. I'll show this last one. I think this one's really interesting, and this shows how people can monetize. This is a company called KB Home, and KB Home is one of the top home builders in the United States. And what they wanted to do was find a way to take that being there in their office and choosing how to design a house and make it virtual. So we created this virtual store with a virtual assistant called Lynn using AI, and we built to scale 3 model homes. Okay, so 3 homes that look a little bit different that you're able to go to, walk around and say, where's the bathroom relative to the kitchen? How big are the bedrooms? How big is the backyard? How big is the garage? But further, what we were able to do, and I'll fast forward here a little bit, is the ability to customize it. What kind of brick would you like to use in building your house? Then you could go into the kitchen and decide what kind of countertop do I want to use? Would like to use granite or marble? What would my lighting look like? What color would I like my floors to be? The ability to customize it and see what that looks like and walk around virtually is a great selling tool for something like a real estate company, because normally you really just might be picking something out of a magazine and it might be specific. But once all these things end up being selected, you can save your results. You can contact the company. They can tell you, great, this is where this can be built. And you can see here some of the choices are about to pop up, so you can sort of get an idea of the drop-down menu and the various choices that you would have. And again, this was like, again, this is the backsplash. You can do the cabinets, the countertops, all different things that you can customize in a house that is to scale. You can choose what it is and build that. And I think that's very unique. And this is some of the ways we're helping companies to monetize. So to keep going with so that is our one business, Metaverse Group. We have another business, which is crypto staking. So I came from the crypto mining space, and one of the reasons I left that business where I was uncomfortable is you're using a tremendous amount of electricity. I didn't feel that was a good thing to do as a father, and I wanted to find a way to do something similar to provide that validation work for crypto transactions in an environmentally safe way. And so staking really provides that. And so we have an inventory of tokens. It's primarily Ethereum, which is the second largest crypto in the world, and we're earning income. I'll note that this is not a lending program. It is a voting program where the assets remain with us and we're just validating transactions. So we're being paid in additional tokens to hold tokens. It's a neat business. Then we have Hulk Labs. Hulk Labs is our gaming studio. So Citibank, this is interesting. The largest category in entertainment is not film and it's not music, it's gaming. It's estimated that there's over 3 billion gamers in the world in some form or another, and Citibank is projecting this to grow to 100 million gamers by 2025. 100 million from maybe 2 or 3 today in the Web3 space. And so again, we're like, how do we leverage this? How do we build something here that is of interest? So there's a couple of things that we're doing. Number one, we saw, and we have experts in the space. I'm going to just play this video here. We saw that there's a lack of proper games built for mobile. Now, why mobile? Mobile, because it's the largest audience in the world. We're able to access third world countries and places like Asia and Africa where they're not buying the latest, Microsoft console or PlayStation. They don't have computers. They function off their phones. That's the most important way for them to communicate, get in touch, and to play games. And so we're developing our own game called Asterisk Defense. We've actually built a lot of it using AI tools, which is great. So we're not an AI company, but we're certainly leveraging it as a way to reduce costs. And I think we've saved several $100,000 by using AI as part of our development or our building. So that's one of the things we're doing there. The second thing that we're doing is we're developing what I would call a gaming website aggregator. So very much in many industries, if you want to get information about something, you can go to a website and it'll give you all the information. Although this is this massive community that's being built here, going to the tens of millions, there's not a place for people to get information as to what games to play, what are the statistics, and there's nowhere for players to list their statistics. Now that's more important in Web3 gaming than it is in regular gaming because you can resell assets. You may have a sword or a shield or something else that because of its gameplay might be worth $5,000 or $10,000. But in order to demonstrate that, you need to upload your player statistics. And so Yeti is going to be this real-time website that we're building where players can connect their wallets and upload their playing history. And so you'll be able to say, this is how many times you've won and lost. And again, the reason that's important is it's all about validating your skill sets, your tools, so that if you look to resell, we validate that. And for the games, when people are choosing which games are most profitable, where can you earn the most tokens, we're providing that analysis for free. And the games love us doing this because they don't do their own analysis. They're getting independent third-party valuations as to why people should play their games. Moving on, we have a couple of other smaller assets. One is Coco NFT. It's an ability to convert Instagram posts into NFTs within minutes. We also have a strategic investment in Metaverse Architects, which is a game 3D modeling company based in Malta. So overall, we have this portfolio. These are some of our assets. We also own an extensive portfolio of digital real estate. As of June 30th, quite recently, that was valued at US 10.7 million. It's mostly all very liquid. We also own a whole bunch of domain names. And if you were to Google tokens, and again, Citibank, a bunch of places are saying it's inevitable, the tokenization of everything in the world. If you Google tokens, the #1 SEO that comes up is our domain name. And so we believe in the future that that's going to be worth tens of millions of dollars to somebody in the space. Our growth strategy is to continue to grow organically. We have a good balance sheet. We're looking at acquisitions as well. Our balance sheet is very strong. We're not here looking to raise capital. We have, this is in US dollars, over 4 million in US dollars and close to 8 million in liquid crypto assets, as well as other assets. I think we're currently very undervalued, but you can see some of our statistics there, and this is as of June, so it's very recent. We've been covered in media all over North America and in Europe. People are really fascinated with the things we're doing because we're being very cutting edge in terms of how we view things. We have a very strong team. This is all available on our website, which again, very easy to remember, tokens.com. A strong board. And to summarize, before we head into questions, we've been very good. We haven't issued any capital since 2021, unlike many other companies. My view is, as a large shareholder in the business, that I want to keep the shares scarce. This is not about continuing to issue capital. I think that companies that issue too much capital generally don't create value for their investors. So we've been very prudent there. Our assets are very diversified, as I think I've shown, across these different areas that all appeal to Web3 and this new younger generation. Our businesses are all growing. Everybody's revenue positive, early stage, but revenue positive. We're well capitalized with 12 to 14 million US of cash and digital assets. And again, our leadership is experienced in banking, crypto, we're proven entrepreneurs, and we're aligned. We own about 15% of the business as well. So that's really it. Maybe with that, I'll turn it over back to you, Carlos, in terms of queuing up any Q&A. But I think that's really a good summary of the business and in terms of who we are and what we do.
Well, thanks a lot, Andrew. Very interesting, and a lot of buzzwords that I'm quite sure that everyone knows, although it might take a while to just process that. But could I just expose my ignorance here and ask you to point out some peers? And basically what I'm looking for here is if we can have some comparables in our way to value the company. Who would you compete with?
So in different areas, we compete with different companies, but to be honest, we're working in something very new. We're pioneers here. I was at a conference yesterday and somebody was talking about, when at the beginning, if you're one of the first automobile manufacturers, as if you're not quite sure. There's some companies out there that are doing some development in the metaverse space. There's probably a handful that are private. I don't know of any public people doing what we do. And I think what we're doing by integrating in e-commerce, the e-commerce experience for consumers hasn't changed in 25 years. We're trying to integrate that into monetize. And from a public domain, I don't know anyone doing that. In terms of game building, there are some private companies out there doing that, but they've primarily been funded by VCs. We're the only people doing this in a public market sphere. So it's very hard to find actual public market comparables for us.
So the common denomination here is really, let's say, the focus and the knowledge about the end user, the customers, as it were. Would that be one way of looking at it?
Exactly. I mean, we're leveraging things that are being done. I'm sure people might be familiar. Apple has a history of taking technology, sometimes not the first to bring it out. Like they weren't the first to bring out a cell phone, but they were the ones that take it to the mainstream. And what's interesting is Meta has their headset. which is okay. But Apple just launched a new headset, which is coming out in the new year, called the Vision Pro. This is going to be huge. This means we'll be able to develop three-dimensional apps for people with this Vision Pro, where you'll be able to go shopping, try things on, and do various things all from the comfort of your house. And so we're really excited about the development of these things. Again, we try to be complementary to the technology that's being developed by the very large players.
And if we look at the well, your different pillars, and if we look at the different clients, and there was some name dropping here with I mean global names. What is the biggest hurdle to onboard a customer? Is that their knowledge of it, or is it price, or competition, or technology?
So today, almost every brand or company is testing the waters. Really, it's about educating them. The information I'm providing you with respect to this new generation, this Zalpha generation is going to be close to 50% of the workforce by the end of the decade. They're going to be the largest consumer in history. And as I mentioned, the brands are all struggling. How do we do this? I provide presentations to some of the major banks here in Canada, and they ask me, Andrew, what do we need to change in order to do everything? And I tell them, you need to change everything. These people aren't going to want to come into the branch anymore. They think differently, they act differently. You need to go and see what they're doing. And this is part of the way that you can get there.
Yeah, I like the way that you refer to the banks, because here in Scandinavia we have been very, very, very active and moving out the clients from the bank office, as it were, and into the web page here. So that's interesting. How hot would your different markets be? Is it, and with that I mean, is it becoming a crowded market out there, fierce competition? And if so, would you be a seller of any one of your pillars, or do you really think that you need them all together?
Right.
There.
Yeah. The idea, and this goes back to the beginning of the presentation, is I wanted to create a vehicle that gave people exposure to these areas. And I think any one of our various areas has the potential for explosive growth, whether it's the gaming or the metaverse group side. If there were things that I'd consider selling, I think if I was to get a good offer for the domain name, tokens.com, I think I'd contemplate selling that. I think at some point, if Metaverse Group grows large enough as an agency, when the revenues start getting a lot bigger, that may be something we spin out. With Hulk Labs, so the aggregator website, to put it in context for you, I think we have the potential to be the largest Web3 gaming website in the world, meaning where people go for information to upload their statistics. If you look at CoinMarketCap, which is the equivalent in the token space, they sold earlier this year for 400 million US. Now, I'm not saying we're going to sell Hulk, the Yeti product for $400 million, but if we're the number one Web3 gaming website in the world, and that grows the way Citibank has projected to 100 million gamers by 2025, which is a year and a half away, that website is certainly going to have a tremendous amount of value. And the technology we're using there, players being to connect their wallets to upload their player statistics, that is intellectual property we own. And to my knowledge, nobody else has that capability in the world right now.
And that leads me to another question connected to this would be synergies. But if I could just rephrase that and say, to me it sounds like there are, I mean, touching in the framework, but quite, it's a fast-moving market, AI with the customers, what they want, and also in technology. So how do you manage to keep the pace with your different sub-companies, as it were?
So I know it may not seem obvious. The synergies are actually quite large. And I'll give you an example. We did recently a project for Conagra, which is one of the largest companies in the world. And they have a brand called Slim Jim, which is a meat stick. And we were doing some design work for them, and we wanted to gamify it, create a game around it. And to do that, we use the expertise at Hulk Labs, because Hulk Labs is our gaming studio. We're currently working with a mattress company, and the mattress company is a client of Metaverse Group, But what they want to do is build a game in Fortnite, which is a game that has something like 300 million people signed on. And so the management and the design of the virtual store is created by Metaverse Group, but then we leverage our relationship with Hulk Labs, because we own both, to build the game. And so there's going to be sort of a game there where sheep are bouncing on mattresses and things like that. And so branded gaming is actually going to be huge, because if you're looking for ways to engage this younger generation, it's more than just like a one-stop shop where you show up and it's a virtual store. You have to make it interesting. You have to make it sticky, and games seems to be the easiest way to do that.
And it seems like you at least need some razor sharp employees. So how do you attract employees, and how do you keep them?
Yeah, good question. We've been able to attract people from all over the world, and I think part of it is because we're doing some cutting edge stuff. So the people that we've come on the developer side, really they're just intrigued by being cutting edge and building things that nobody else in the world is doing. This is a chance for us to be creative and really rise above and feel good. On the sales side, we have some amazing salespeople, again, targeting international companies. And the reason we can do that and they're excited is we're offering products that are required, they're needed, people are interested. There's always great topics of conversation, because what we're selling is something that, it's valuable. Being a public company also helps. We're able to provide things like options that keep people motivated and aligned to wanting to produce for the business.
And you referred to your sell staff here, and also we've seen some pretty well-known global names here. But when you have a contract with a Shell or a DKIY or such, is that a global one, or is it let's say a more regional one? So EI, are you able to get a bigger piece out of each client, or how does it work?
Each contract is unique, but I'll give you an example of one. So we're working right now with one of the top 2 accounting firms in the world. And originally we won the contract for the Canadian branch. And as we were building this, I guess through their meetings, they said, hey, do you guys mind pitching our Australian group? And we were like, sure. So we showed them what we were doing, and the Australian group said, hey, we want to get involved. Then they came back a few weeks later and said, our US team wants to look at this as well. And by the end of this process, we ended up signing this firm, the global, again, one of the top 2 accounting firms in the world. And we're going to be doing a global launch for them, basically across every country. So this will be a place where people can go regardless of where you're geographically located. For something like DKNY, it was far more US focused. That's where their client base is and the stores. And so they would have less interest in maybe, attracting people from different places. So every contract is unique.
Oh, interesting. And you have a strong balance sheet. You went through the figures there, and I urge anyone to do that. So it's some $20 million US, which compared to your market cap makes this share very interesting, at least to my mind. So would you be for sale, or how shall the market cap increase?
So this is an interesting question. I struggle with it. So I can point to our balance sheet and say we're undervalued based on assets, okay, cash and the value of the assets that we hold. But really what we are is, we have something far more interesting happening here. Like I said, if our video game takes off, that is worth tens of millions. If the aggregator website takes off, that is worth a lot. If our domain names, again, #1 SEO in the world for Googling the word tokens, that in itself might be worth our entire market cap. And so, the way things are valued by auditors is very different than the promise of what can be built. You would never go, for example, the early days of Google and value them based on the value of their desks and their computers, right? You have to look at the future and say, what are these people building? But I do think that having the assets and the cash provides a cushion of backdrop of security for investors to say, okay, this company's not going bankrupt. There are assets there, digital assets and cash there to support the valuation, but the upside can be much bigger if they're successful in bringing these projects to fruition.
Yeah, exactly. So basically, you either buy your future success here, or you buy the cash position in the company, which I think is
Listen,
quite attractive.
right. I mean, look, everything is a risk. There's no guarantees. I can tell you we're working hard, but I'm excited about all the different businesses we have. They all have like really huge potential. Um, if one of them hits, that's a win. If 3 out of 5 hit, that's a home run for everyone.
Well, thank you for that, Andrew. Extremely interesting, and you may not be able to say that, but I can say that because to me it sounds like tokens.com is actually an opportunity to buy tomorrow today if it works out with a stable balance sheet and very interesting different pillars to stand up. So that will be very interesting to follow your company and the development here. So thank you so much, Andrew, and anyone who has any further questions, I will refer you to tokens.com. And with that, we thank every viewers, and we will be back shortly while we have connected our next overseas company. So see you in a bit. Välkommen tillbaka. Vi ska nu fortsätta Investerarafton special och vi fortsätter på engelska. So welcome back. We'll continue the presentation and this time it's my great pleasure to introduce Minehub Technologies, described as a low friction SaaS platform. And we have two speakers. We have Andrea Aranguren, CEO, as well as Vince Soraci, who is the executive chairman, and we will just check the connections here. So hello Andrea, can you hear me?
Yes, we can. Hello.
Yes, excellent. And I see that Vince is with us as well. So without further ado, please Andrea, go ahead and explain how you can transform complex commodity transactions into real-time experience for the customers and suppliers. I believe this is pretty unique, so the floor is yours.
Thank you so much, and thank you for the opportunity for us to tell the Minehub story. Just sort of starting at the beginning, at the problem that we're looking to solve. When you think about it, the world has digitized pretty much everything that we do. We see that certainly in our personal lives as well as across the vast majority of all industries. Yet, remarkably, the $11 trillion commodities industry is still operating on paper and spreadsheets. This leaves companies prone to human error as data is manually inputted. It creates a huge amount of operational inefficiency and wasted money. But what we're seeing more and more, and this is particularly highlighted in the post-COVID world, is that the failure to modernize and digitize the commodity supply chain is not just inefficient, but it's also creating massive risks for the companies within the industry as well as for the economy as a whole. We see these risks resulting in chronic raw material shortages. We see labor shortages. It's getting harder and harder to hire and retain talent to actually perform all these manual tasks. We see increasing supply chain disruptions, not just on the supply side, but even transport and in freight markets as well. We see increasing regulations across the globe and unfortunately persistent fraud. And our platforms are solving these very high value challenges that we're seeing emerging more and more in the market. Issues around supply chain resilience, an increasing focus on ESG compliance and reporting requirements, more transparency around emissions and measurement. As I mentioned, increasing trade regulations, having to prove the actual origin of material and providing more traceability as material moves through the supply chain, sanctions, fraud prevention becoming more and more important, as well as increasing data security and regulations requirements. Minehub has emerged as the market platform, the digital solution for the commodities market. Our mission is to make raw material supply chains more efficient, resilient, and sustainable, and we'll be talking through exactly how we're doing that. Our approach starts with a very deliberate commercial strategy. We are very focused on the mining and metals market. We've seen a huge amount of traction, particularly in copper and aluminum markets. And so we certainly continue to focus on reaching critical mass within those markets where we've seen a lot of momentum, and then in the future expanding to additional markets. The other sort of key tenet, the key part of our go-to-market strategy has been that we have very deliberately signed the largest companies in the market, the true market leaders, companies like BHP and Codelco and Sumitomo to be our customers. And when we deploy the platform for their businesses, we onboard their entire supply chain. So every node within their supply chain, every counterparty, every logistics provider, every key warehouse. And those counterparties will receive a free account to the platform so that they can manage business with this very large customer. And these customers really help us to drive adoption of the platform, to bring on these key partners onto the platform, and also very importantly, to feed our sales pipeline, because those free users become the key prospects at the top of our sales pipeline as we then work to convert them to become paying customers. Additionally, because these companies are so large with global complex supply chains, even if we start deploying the platform with one initial scope, say, one material or in one region, such as North America, these companies are so large that there's huge opportunities to expand even within each existing customer set. And we've seen that This sales playbook has been working very effectively. And we've been able to grow our ecosystem quite dramatically from 20 companies in 2021 to more than 150 companies by the end of this year. And this includes, as I mentioned, some of the largest key players in the market, some of the largest producers, traders, and manufacturers all throughout the supply chain. And you'll observe that there's an incredible virality to our sales strategy and our implementation approach, where we use a traditional hub and spoke model, where every customer becomes a new hub. And as we implement the platform with their business, we onboard their entire ecosystem. And then once those customers are already connected and familiar with the platform, it's much easier for us to sell them, to then onboard their entire business and to then become a hub in themselves. And we've seen an incredible network effect from this approach. We've seen accelerating sales cycle, accelerating implementation cycle, as well as we take advantage of this network effect and this incredible virality that we see in our approach. We spend a lot of time thinking about the value that we deliver to our customers and who our customers are. And certainly there's a tremendous amount of value to both the buy and the sell side of the market before actually adopting digital tools. So when we think about the buyer, in the absence of tools such as the Minehub platform, the buyer doesn't really have great visibility into their incoming raw material flows. They don't have a central collaboration platform where they can more easily collaborate and share data with their supply chain. And at the end of the day, what they want to do is they want to make sure that they don't shut down their plant. And so what they end up doing is they end up buying more material and holding excess inventory to avoid plant shutdowns. But because of all the supply chain disruptions, because of all the freight market disruptions, they end up still overbuying material and still having to shut down their plant. And so by adopting digital tools, by reducing shipment delays, by having better visibility into their raw material flows, and having the luxury of time to plan better and to avoid plant shutdowns, McKinsey estimates a 15% potential increase to EBITDA margins for buyers. On the sell side, interestingly, the value is connected to customer experience. And Bain estimates a 10% potential increase in share of wallet due to the superior customer experience, mostly because by adopting digital tools, sellers, they drive efficiency, they improve the customer experience, they shorten lengthy lead times, they improve performance, and they can shorten or create a quicker payment cycle, driving them to grow revenue and increase share of wallet across their customer base. Perhaps most illustrative of this is to actually go through a specific customer case study. One of our early customers is a company called Essex Furukawa. They are the leading global provider of magnet wire to the electric vehicle industry. So they sell to customers like Tesla and Hyundai and Ford, and they have seen incredible results after implementing our platform. They have been able to reduce inventory on site by 66%, driving considerable working capital costs, while also still avoiding 5 plant shutdowns. So they're running very lean inventory, but still being able to avoid any plant shutdowns at all, while also driving considerable efficiencies from an operational perspective. So they report a 90% reduction in Excel usage and a 60% reduction in email usage around shipment data, which is remarkable if you think about it. And also, they are 8 weeks ahead in forecasted ordering. So what that means is that they typically they'll negotiate annual contracts with their solid supplier base. But because there's so many disruptions in the market, what would happen is that disruptions occur and they can't rely on their annual business to supply the plant. So they actually have to go into the spot market to buy additional material at less favorable rates, higher premiums, almost certainly. And so because of the digital tools, the visibility, the optimized inventory management and predictive analysis that we offer, they've actually pretty much avoided any spot buying activities after implementing the platform. So let's take a moment to talk a little bit about the platform and what it is, right? The platform, as you say, is a low friction SaaS tool. The way we think about it, it is a post-trade management tool, right? So this isn't a marketplace. Buyers and sellers continue to negotiate offline. They often have known each other for a very long time. And after extensive studies in the market, the real pain and inefficiency is actually not in the actual buying and selling itself, but in the management and the fulfillment of the actual orders. And so once an order is confirmed, it will get uploaded to our platform, and that will set off a series of workflows where buyer and seller can manage the fulfillment of that order. So everything from confirming monthly order quantities to facilitating delivery schedules, to capturing and automating shipment data, capturing shipment documents, providing real-time tracking with updated ETAs so buyer and seller can see exactly where their material is at any moment in time. And then utilizing all of that data to provide predictive tooling, superior inventory management, and robust tools to help mitigate fraud, drive compliance, and ultimately optimize the operations for both our buyers and our sellers. Just to give you a little peek at the platform, this is the order collaboration and real-time visibility that we provide customers. This is a truck where you can see at any moment in time exactly the route and the trajectory that the truck took. I was in operations and I ran logistics for many, many years, and actually having access to this information, manually compiling it, ensuring that it's current, reconciling it and organizing it and communicating it with your supply chain is incredibly difficult and very, very labor intensive. But we're able to leverage our automations and our digital connections and our connectivity to the entire supply chain in order to do this seamlessly on a platform. And as I alluded to, what this unlocks is an incredible ability to provide very holistic reporting. We're seeing customers becoming increasingly interested in ESG and emissions reporting. We currently calculate transportation emissions for every shipment that moves through the platform. We can also help customers to calculate percentage of sustainable sourcing, to validate the origin and the provenance of all of their shipments, helping them to verify compliance with different regulations, and even to measure and track performance against their own ESG performance metrics and helping them to achieve differentiation through that. We've also built a tool which we call the Assay Exchange, which helps to digitize one key aspect of the workflow in the base metals concentrate market. And so by being able to add this to our holistic trade management offering, we're able to use this same philosophy of automating data, digitizing it, and providing our customers with the ability to use that data to perform strategies and to solve a very key pain point, particularly within the concentrates market. So what just went through very briefly is what we describe as our supply chain platform or our trade management platform, which ends up as a holistic end-to-end management platform for mining and metals. But what it also represents is an incredible foundation for future product growth. So one growth area, which I alluded to earlier, is new market entry. So our platform is built, as we say, material agnostic. So we can handle any physical commodity. Of course, now we're very focused on copper and aluminum, but there's absolutely no reason from a technical perspective why we cannot, add on and address the needs of adjacent markets such as agriculture, chemicals, and ferrous or steel markets. And we've had many discussions with consumers and producers in those markets who suffer from the same pain that we're seeing in the mining and metal market. So that's a key growth area for us, certainly. Another really exciting growth area is expanding and leveraging the foundational platform we've built to add on additional services and features. So one of the features that we're most excited about is trade finance. That same visibility that I outlined that we provide to buyers and sellers is also very critical for banks and other institutions that are financing the commodities, as those shipments are clearly the collateral for their financing activities. So we're in discussions with a variety of different banks and lenders to discuss how we can leverage our core foundational platform to help them to mitigate risk and to drive efficiencies in their trade finance activities. Additionally, as we mentioned, we're starting to make, grow in leaps and bounds in terms of our offering from a sustainability perspective, but yet there's a lot more to be done as the market evolves and refines exactly what the requirements and the frameworks are. There's huge growth areas around traceability, chain of custody. So we see sustainability as a really interesting growth area that we think we're very, very well positioned to capture, as well as additional opportunities to further digitize documents. We see in our markets, even with market leaders that are operating sort of at the highest, caliber of the market, we still see plenty of handwritten bills of lading that are scanned and sent throughout. So we think there's a further opportunity certainly to digitize on the document space as well. And in the end, we're very encouraged by what we see as a massive greenfield opportunity. There is very low penetration of digital solutions in this market. We often receive the question, who's your biggest competitor? And honestly, our biggest competitor is the status quo. It's paper and spreadsheets, emails. We're benefiting, and the market is certainly benefiting from increasing tailwinds. The new regulations and all of the driving forces towards digitization are helping us to increase our commercial momentum. And we feel very well positioned in the market in terms of there are significant barriers entry to enter the market. There's significant domain expertise that's required. We have been fortunate to sign on key market leaders that took considerable effort. And we see that there's a pretty significant first mover advantage created as a result. And so we think that we're very well positioned to emerge as the market leader. And when we think about the opportunity, we break it down into sort of two different components, right? We see a $7.5 billion addressable market. $1.5 billion of that market potential is driven by us continuing to sell our core supply chain platform, continuing to charge the software as a service, software enterprise fees that we're charging our customers, and selling that core platform. But as we start to overlay additional services such as trade finance and sustainability, we see that opportunity exceeding $7.5 billion. We are truly a global company. We have team members in the US, in Canada, in Latin America, in Europe, and in London, as well as in Asia. So we're incredibly well positioned from a customer expansion perspective, being present in all of the key industrial markets and mining jurisdictions and financial hubs, but also from a customer support perspective. As we continue to gain traction and grow our customer base, we're well positioned to support the global industry as we see customers from all over the globe. And we benefit from an experienced executive team with deep expertise in physical commodities markets, as well as in technology markets, as well as an experienced board of directors and advisors that is guiding us throughout. And now we are incredibly optimistic about the future ahead. We see ourselves as at a very exciting inflection point. Obviously, you may have seen that Minehub purchased a company called Weybridge, and back in March of this year, we've been in the process of combining the two companies and refining our commercial strategy and our product strategy. We've been able to capture incredible synergies as a result of that combination. And we also see a huge increase in commercial momentum as a result also. And we've really emerged as the market platform. We see a clear path to critical mass, particularly in the markets where we've seen the most traction, and more importantly, very near-term positive cash flow. So we expect to break even in the near future. And we've benefited from consistent support throughout the investment community as we continue to grow. And with that, I will open it up to any questions in the audience.
Okay, thank you very much. This is very interesting, and my first, well, it's not really a question. It's more of a reflection. Why hasn't this been done earlier? Because it seems like a no-brainer. But how do you find your customers, or do they find you? Because you mentioned that. The operators of this, the buyers and the sellers, they know each other from years on. So are you out there chasing customers, or do they actually come to you, or is it a combination?
That's a great question. And I actually wanted to comment on your reflection of why this hasn't been done before, because we had the same question and we've spent considerable time sort of researching and evaluating that same point, right? Because we're not the first company to come to try to solve this problem. There have certainly been other companies that have offered solutions, but they ultimately failed. And when you look to actually dig into why they failed, we think they failed because either they came from the industry, but they didn't know how to build the technology required to solve the problems, or they were technologists that built this great technology platform, but they weren't solving the right problems. And so I think a key differentiator with Minehub is that unique combination of industry experience with technology experience and experience building enterprise level technology is very, very critical, I think. The other aspect is that because we came from the industry, we were able to leverage our own personal networks and relationships with industry leaders. And we had built trust over many years to help them to sort of sign on to this digital movement, really, and take a leap of faith with us early on when their peers may have not been investing in digital tools. And now we benefit from having these market leaders as partners. So now to answer your question, it's really a combination, right? We certainly are going to market pretty aggressively, but we also see a huge amount of inbound leads from customers wanting to learn more about the solution.
Yeah, it makes sense. And I saw the recent press release here, getting Codelco as a customer. First, if you can enlighten the viewers here what Codelco is, and also how long did it take to onboard that client? And is it possible for you to communicate any kind of value, or shall we just calculate backwards from the SaaS fees and the facilitation and transaction fees? Well, there's a lot of questions in one question, but please go ahead.
Sure. So Codelco is really a great example of the virality of our approach and how we have been very successful in converting free users to paying customers. Because it's no secret in the market that Codelco was a supplier to one of our customers. And so when we deployed the platform with that customer, we onboarded Codelco as a free user. So they became very familiar with the team and the platform. They saw the value of the digital tools and how it could be transformative for their business. And that is what well positioned us to actually win their entire business, for us to manage 100% of their digital sales initially for their refined copper business. To your earlier point about who is Codelco, Codelco is the largest producer of copper in the world. They're a Chilean state-owned company. And because we had been in contact with them since earlier on with our customers' implementation, so it's hard to sort of calculate what the sales cycle or how long it took to convert them. But naturally, as such a large company and being state-owned, they do tend to move slower. Which is sort of the point about it was not an easy feat to sign such important market leaders. And now that we have them as committed partners, it would be very difficult for another company to come on and sort of take market share from us.
That in one way describes one of the question here, which is competition and hurdles for competition. But I assume that if you have the big dragons on board, then obviously it will be very hard for anyone to be able to deliver a Me Too service. Would you agree with that?
Absolutely, yes.
And also, this is also a reflection, actually, because if you look at the fees, the SaaS fees and the facilitation fees, in the grand scheme of the actual ticket for a buyer and a seller, I would assume that as long as it works, they're quite happy with your fee structure.
Certainly, I think another way to say that is that we are delivering more than enough value to justify the fees. Yes.
And also, you showed us a map with where you were around the world, and it pretty much follows the transportation routes for the underlying commodity here. But I could see that the cost relating to offices and miscellaneous went up 4 times year on year. Is that because you needed to grow on the offices, or is there any other reason? And the long-term question is that I mean, you won't be needing to grow coming years, or how should we look at the cost structure?
Yeah, the question of offices is interesting, right? We've seen some costs in the combination of the two companies. Different companies had different offices and such. And so we've been in a process of capturing different synergies. So I would expect costs like office costs to come down considerably. Also, we've moved to a hybrid working model in more recent times. So we actually no longer have an office in New York, which obviously will generate cost savings. And because we have team members spread throughout the world, we already have a very strong culture of working very effectively via video calls and working sort of asynchronously. So although we maintain our office in London, we actually anticipate the office costs to come down over time.
And you mentioned new markets, but there will be a reflection from my side, of course, here. But it seems like you get your hands pretty full here. Is there a risk that you will grow too fast, or do you have any stages that you want to do? Because it seems like there's a lot to do in let's say copper, aluminium, perhaps bauxite or iron ore. Is there a risk for a growing pain here?
There's certainly a risk, which is why we're very, very focused in our strategy. We're very deliberate to continue to focus on copper and aluminum. So even though we see opportunities across different commodities, we realize that there would be a huge benefit for us to stay very focused in this approach and ensure that we can deliver value to our customers, maintain their level of happiness while really leveraging our network effects and growing within the markets we know that we can deliver value incredibly quickly and effectively. And also in just being very targeted in converting freemium customers that we've already done a lot of the work in training them and connecting them and signing legal agreements and really leveraging all of that investment and time to converting them to be paying customers. So we mitigate that risk by being very focused in our approach.
And if we then looked at the growth potential that you have, and I will say it's frontier, and you seem to be more or less alone competing with, well, perhaps the spot market and so on. How do you keep the staff? Do you have a lot of skin in the game?
We run a very lean team. So right now our focus is to be cash flow positive. So we are being very deliberate in growing revenue in a very careful fashion while keeping the team lean. And then once we achieve this break-even purpose, then we'll have more money to invest in the company and to grow the team and then to really take advantage of future opportunities.
And forgive me my ignorance here, but when I look at the shareholder structure, I saw something called associates and advisors, which is around 15%, incidentally the same as the holding by the management and insiders. So how should I interpret associates and advisors?
Vince, I'll let you answer that one.
Sure. Those were when we started this company many years ago. Those were just people that were close to us and our organization. So more, like friends and families and people, investors that are very close to us, high net worth people.
And if I look at Minehub here, and I would say that you're, if not first mover, you're the only mover, and you seem to have got a particular good hold about the of the large clients here, and an underlying market that is worth billions of dollars every year. Are you for sale?
Vince, I'll let you take that one too.
Sorry, the question was, are we for sale?
Yes.
Not yet.
And I can see why. So very interesting. what would be the next news information? Would that be more clients, or is there anything else you would like us to keep an eye on, or is it the quarterly or the full year?
It will
Certainly.
be
Go for it, Vince.
a combination of, at this point, it's about growth, and growth is going to come through revenue and earnings, and so that's going to be reflected through us being able to talk about and announce new customers. And that will be combined with, and Andrea mentioned, growth through additional services and features onto the platform that will be directly related to revenue growth. So that's what people can expect moving forward. Us getting new customers, us on the quarterlies now. We started and just started reporting, and will be reporting quarterly revenues and financials. So you can expect that in the future as well.
Thank you so much. This was extremely interesting and invigorating, and it seems like you have a pole position in a market that is continuing growing, where almost every one of your pillar here will be needed for a buyers, and that's not only do we need the commodities that you are able to facilitate, but we also need to where it's coming from, and also when we've seen all the shortages and supply problems. So Minehub technology would be very interesting to follow. So with that, Andrea and Vince, I thank you so much, and I will thank anyone who has watched and asked question. And if there are any further questions, we will recommend that you look up Minehub on their webpage, which is, I would say, easy to find, easy to read, and easy to understand. So with that, thank you so much.